Ji, Assalamualaikum, all participants. Welcome to the corporate briefing session of Asri Bank 2026. We will begin the session with the recitations of the Holy Quran.
अल्लाह के नाम से शुरू जो निहायत मेहरबान हमेशा रहम फरमाने वाला है। बेशक हमने आपको हर खैर व फजीलत में बे इंतहा कसरत बख्शी है। बस आप अपने रब के लिए नमाज पढ़ा करें और कुर्बानी दिया करें, ये हदिया तशक्कुर है। बेशक आपका दुश्मन ही बेनस्ल और बेनामो निशान होगा।
Welcome once again. Let me quickly give a introduction. The speakers include Jai Jasab, President, Salim Saab, CFO, accompanied by the senior management of the bank. So the flow of the meeting will be a brief presentation by President and Salim Saab, and then after the presentation, the question and answer round. Some of the questions have been asked by the participants in advance. हम पहले उनको मौका देंगे कि पहले उनके आंसर्स हम ले लें, and then after that मेरी तमाम लोगों से ये रिक्वेस्ट होगी कि जो अपने क्वेश्चंस हैं वो चैट बॉक्स में टू दी होस्ट वो वहाँ पे राइट करें, so that कि हम after the presentation उसके रिस्पॉन्स दे सकें. Thank you so much. Sir.
जी, अस्सलाम वालेकुम. My name is Salim Saab. I am CFO Askari Bank. I extend a very warm welcome and thank you all for taking out the time to attend the session today. I have a brief presentation on the overview and financials for the year 2025. Our detailed financial statements along with detailed performance review was uploaded on our website on 24th of February. So some of the details you may have already seen on our website. So just to give you a brief overview of Askari Bank, the bank is 72% owned by Fauji Foundation and Fauji Foundation and Fauji Fertilizer Company. They collectively own 71.9%. Askari Bank's presence is 757 branches, which are in 267 cities and towns across the country, and we have two international outlets. One is a wholesale banking branch in Bahrain, and we have a representative office in Beijing, China. We can see the PSX indicators on this slide. Our share price jumped from 38 rupees last year to 156, closing at year-end 2025, which translates into a market capitalization of almost 146 billion. So year on year, we see the market cap has grown by 163%. Our entity rating is AA+. Our capital adequacy ratio at 31st of December is 21.59, comfortably above the regulatory thresholds. And the number of staff employed by the bank is 10,584. Next slide, please. These are some of the growth statistics for the year 2025. Our total asset base at 31st of December 2025 is 2.9 trillion, a growth of 16% recorded during the year, funded mostly by deposits. That number is 1.6 trillion, a deposit growth of 20% year on year. Current account 502 billion, almost 30% in terms of CAR ratio. Year-on-year increase in 29%, and this has been the main attribute contributing to the profits that we have in 2025. Earning assets 2.6 trillion, almost 90% of the balance sheet is here. Year-on-year growth of 19%. Profit before tax 53 billion, growth of 20%. If we look at the numbers of the industry released so far, so in terms of profit before tax, in terms of year-on-year growth, we are at number 5th in terms of year-on-year growth in percentage terms. Total equity 152 billion, increase of 25%. Cost to income ratio 48%. Return on equity, return on core equity is 20%. Our deposit market share is approximately 5%. The bank has active customer base of 2.1 million, and our mobile app users are growing consistently, and the percentage is 47% growth recorded during 2025. Total branch network of 757, and we have 898 ATMs and CDMs and recyclers. That's an increase of 14% in this number. Very nice slide, please. So, just to show how the Askari Bank share has performed during 2025, and on the chart we can also see how the trend has been improving during the last 4 years. So during the year, Askari Bank share has been quite attractive for the investors. Jumped from 38 to 100, that's 163% increase. And in terms of trading volumes, we were number second in this. In comparison, when we can see other banks like Habib Metropolitan Bank, Bank al-Falah, Bank al-Habib, Mizan, and Faisal Bank. Next slide, please. So here we have the balance sheet along with a brief variance analysis. The most prominent figure to look at in the balance sheet is deposit that increased from 1.3 trillion to 1.6 trillion. Almost 1/3 of this growth has been on account of current accounts. That has fueled the profitability. CAR ratio has jumped from 28% to 31%. Net advances are showing a decline of 16% due to maturity of certain short-term facilities which were there in last year. On a comparable basis, our advances book has increased by 20%. Most of our lending has been in corporate and commercial sector, but the priority sector, which constitutes SME and agri, that has increased by almost 50%, and consumer advances increased by 44%. Investments 34%, and portfolio mix is mostly in government securities. That is the trend across the industry. And partly this book is funded by OMO borrowings, which we cover in the Q&A session as well. This investment portfolio is mostly in PIB floaters. That is giving us the revaluation surplus that has jumped by 3 times during the current year. This reflects a favorable book position in both money market and also in capital market. Book value per share of Askari Bank has improved by 21 rupees from 84 rupees to 105. That's a 25% increase, which aligns with the increase in total equity of the bank. Moving on to profit and loss, our core revenue stream, which is net interest income, has increased by 38%. This has been a remarkable growth during the year, and most of it is on account of growth in current accounts that we saw in the previous slide, and also partly due to our money market portfolio. And non-fund income, the number has increased by 15%. The 2 figures here that have been main contribution is from 10% growth in fee commission income, and also gains on government securities, higher dividends, and foreign exchange income. The bank is in an aggressive growth phase. During the last 2 years, we have added 97 new branches. That is the reason for that is one of the reasons for 39% increase in operating expenses. Otherwise, the bank is also investing heavily in human resource, technology, digitalization, and marketing initiative. Most of the expense growth is to support the business growth. Profit before tax has increased by 20%. During the year, I think all participants know that the banking sector has been subject to excessive taxation, and windfall tax is one area where we had to make provisions during the year. So our profit after tax has taken, the growth has been relatively lesser than PBT, 8%. If we take out the impact of windfall tax, the growth would have been 20% in line with profit before tax. So EPS of 15 rupees and 73 paisa compared to 14.5 of last year. These are again some of the key ratios. The profitability ratios are showing marginal decline. If we take out the impact of windfall tax, all the profitability ratios in terms of return on assets and return on equity are better than last year. Deposit growth 20%, current account growth 29%, current account total deposit ratio increasing from 28.4% to 30.8%. Advances, as I mentioned in the previous slide, last year, if you take out that impact, the effective growth is 18%. Non-performing to gross advances ratio is 5.3%. Again, if we take out the impact of those short-term facilities, the infection ratio has improved from 6.5% to 5.3%. Provision coverage ratio has improved from 108 to 117. Capital adequacy ratio 21.4 to 21.6, and similarly, leverage ratio has increased from 3.6% to 3.7%. These are some of the numbers of the balance sheet and profit and loss account. Again, the year-on-year trend has been captured in the previous slide as well. Can we move on, please? This is the performance of the business segments. And this we are looking at the total revenue streams, total net revenue streams, and total assets. Branch banking has been the main contribution to the total revenue with 42%, followed by treasury, which is money market 23%, corporate banking 17%, and Islamic 14%, and so on. And in this chart, we can also see the mix of deposit and advances. In terms of deposits, 37% of the deposit book is individual retail deposit, followed by public sector entities 35%, private sector, government, and non-banking financial institutions. In terms of advances, 21% growth in trade services, that is the main area, and followed by agri, sugar, rice, food, and all these numbers are also available in our retail published financial statements. Next, please. So again, the session requires to be apprised of the key business risks. Again, this is the description, summary description of the risks that the bank manages. Again, the details are captured in note 44 of the financial statements. We can take any questions which the participants may have in this area. Some of the other updates during 2025, the bank has been focusing mainly on improving the service quality, and there are set measures which we track, and all customer service quality indicators are showing positive trends during 2025 compared with the previous years. Our branch network of 737, during the year, 122 conventional branches were converted to Islamic. So now, in terms of total network, 50% of the bank branch network is fully Islamic, and remaining branches have been equipped to offer Islamic banking services to Islamic banking windows, primarily for the Islamic banking deposit products. The bank is focusing on improving human resource technology, digitization and information technology, automation of manual processes, end-to-end digitization. We've introduced the industry's first in-app calling services. The mobile app rating of Askari Bank is consistently among the best, top in the industry, top 3 actually in the industry. The bank is adequately capitalized, and during the year, Askari Currency Exchange commenced its operations and is now operating with 41 outlets across the country. The bank's performance has been recognized by different forums, including Euromoney, the Asset, Finance Asia, State Bank, SACP, and Asian Development Bank, and these are some of the rewards and recognitions which the bank was recognized for. And again, these details are available in our published financial statements. So this basically is the summary of 2025 performance. As I mentioned, detailed financial statements were available on our website, so we can take on any question and answer. And I would request the President to say a few things.
Thank you, Sadiq. We thank you everyone for joining us in this investor call. You've seen the numbers, so 2025 was not just about strong numbers, it marked the beginning of our transformation journey for the bank. as you all know, all the banks have more or less similar products and services. The key differentiator is the customer service. In this context, the bank made significant progress in customer experience across all the customer touchpoints, be it branches, ATM, digital app, or contact center. We made substantial investments into HR, IT, digital capabilities, and infrastructure of the bank. Given as you know that unlike a manufacturing company where the physical machinery and nuts and bolts play an important role, we are fundamentally a service institution. Our strength lies in our people. So the people were the central agent part of the transformation agenda. Right from onboarding to training and development, recognition, rewards, and career progression, we made significant changes and alignment in terms of the HR policies and processes to have an engaged and motivated workforce. You have seen the results, though we take pride in whatever we accomplished in 2025, but we will continue to build on this momentum, and we hope that we would be, inshallah, able to deliver consistent and sustainable superior results, returns to the shareholders, inshallah. So we can move on now to take the questions.
Thank you, Mr. President, and Salim sir for the presentation and brief to the participants. So, sir, some of the questions have been asked in advance by the participants. We will start with the presentation asked by Mr. Danish from Indus Group. So, question number 1, regarding investment portfolio and mix of the floater and fixed PIB book and the impact of the increase in interest rate on the balance sheet.
So in terms of the mix of the PIB, so 92% as the floater and 8% as fixed. Okay, and regarding the impact on the balance sheet, so I think 1% movement in the interest rate would impact the mark to market of around 3.5 million.
The next question is regarding the strategy of OMO borrowing. And since interest rates do not seem to go down anymore, would you consider reducing your position at the moment or wait for it?
So look, generally, if you look at the maturity and reset profile of our investments versus the reset of the borrowing, so the mismatch is close to 3 months. So that's the maximum risk we have, is the downside for those 3 months. But the repo book does provide us around 70 to 100 basis point spreads. So we, as you must have seen, that we are building our deposit base, so we may gradually reduce the reliance on the borrowings as we build a deposit book. However, till we get the opportunity, the arbitrage opportunity, we will continue to avail this opportunity.
Thank you, sir. Next 4 questions are, sir, from NAFA, NBP NAFA, sir. So, could you provide a breakdown of your investment portfolio between floating and fixed rate, and also what is the average yield and weighted average maturity of the fixed rate book?
Yeah, I think we have discussed about the fixed and floating PIB book. So what's the next average?
So, what is the average spread on your floating rate?
Yeah, so the yield is close to 12%, and the maturity of the fixed rate is roughly 2.5 years.
Thank you, sir. Next question is regarding CET1 comfortably above regulatory requirement. Is there room to optimize capital through higher payouts over the medium term, sir?
So look, this depends on given the current situation. I think there's a lot of uncertainty. So depending on the profitability, as you must have seen over the last year, we started paying the quarterly dividends, and have, compared to the last year, we substantially increased the payout. So depending on profitability, we expect that we will maintain this trend and may gradually increase the payout depending on the profitability.
Thank you, sir. Last question from NAFA Fund, sir. Cost to income ratio has increased to 48% in current year 25 and 59% in fourth quarter 25, driven by a 39% growth in admin expenses. How should we think about the trajectory going forward? Was there a one-off spike, or should we expect some normalization?
Look, so this has partly been addressed by CFO's presentation, but primarily, look, so as I said, 2025 was the beginning of a transformation journey. So we made substantial investments into HR, IT, infrastructure, and digital capability of the bank, which I think were essential in terms of building a sustainable, strong base for the bank. So, and there are a couple of one-offs as well. Obviously, other than we had 96 branches were open over the last 18 months, so there's impact of the capex and opex of those branches. Then we made substantial investment into the consumer business, the card business, the new alliances, the marketing, and then home remittance business as well.
Yeah.
And also, I will just add that cost to income ratio is 48%, which is much better than some of the banks of our size, which are well above 50%. So, despite this 39% increase, our cost to income ratio at 48% is much better than the competition. Thank you.
Sir, after this, some of the questions have been asked by the participant in the chat box. First two questions regarding the average spread and the cost to income ratio already answered by you, sir, responded. Next question is regarding the Islamic branches. More than 50% branches are now Islamic. What is the target of conversion to Islamic conversion for the next year?
So, as you must have seen that in the CFO's presentation, that in addition to the 50% of fully Islamic branches, the entire network has Islamic windows. So, we are looking at different pockets. Like, to begin with, we converted the entire network of KP into Islamic, then Balochistan into Islamic, then the entire business house and the mandis into Islamic. So we are looking at further, converting more branches into Islamic. But we look at the market dynamics as well in terms of availability of the Islamic assets. So we are looking at gradual expansion, but for the next 2.5 years, we plan to convert the entire bank into Islamic, or that depends on the market dynamics and the availability of Islamic assets.
Yeah.
One question on the outlook for during 2026 and in the medium term, and what is the trajectory for India looking ahead? That's a question.
So I think you must have seen that we had a decent growth in deposits, especially the focus is more on the current deposits. Last year, we had a 29% growth from 25 versus 24 in current deposits. So major focus is going to be on the current deposit and building this zero cost deposit book. However, given the unique position we have being based out in Islamabad and given our proximity to the federal and government institutions, we have that leverage that we can have the saving in term deposits as well. So the large ticket deposits, as long as you make a decent spread, we'll continue to expand that book as well. But our primary reliance would be on the current deposit book, and the inshallah will continue to build on the growth momentum and have more or less similar growth which we saw in 2025.
Thank you, sir. A question regarding average spread on the floating rate bond already responded, sir. Then after this, sir, investment grew by 34% to PTR 2029 billion. What is the investment portfolio strategy? Again, the proportion of the total investment portfolio in fixed and floating already responded, sir. Sir, what are the targets for deposits for 2026, sir?
So I think as I just explained that we will continue to build on the momentum achieved in 2025, and we are looking at more or less similar growth.
Sir, I think, sir, all of the questions have been responded, sir.
Okay.
Yes, sir. The meeting will be concluded, sir. Thank you so much, all the participants, for taking out time to attend the SK Bank corporate briefing session. I thank you all. Thank you so much.
Thank you, Lee.
Allah Hafiz.
Thank you.